Good afternoon, everybody. Today is the Feds meeting. We can see if we can get on here. We can make us a bag so we can enjoy the rest of our evening. We got Mr. Powell speaking at 2:30. Fed minutes and decisions are going to be announced at 2 o'clock. We want to get on a little bit early so we can see if we can catch a little bit of action beforehand. I think we do have a few rejection zones. Got a few support areas as well. So see what will take it from there. So good afternoon once again, ladies and gentlemen. How's it going, Chris? How you feeling? How you feeling? We got to be honest, we do got a nice uptick. We did bottom out at 48.78. We're currently at 48.91. So we do got a $13 move to the upside on SPX. So that means SPY actually went to the top as well. So let me know if you can hear me now, Chris. And then we can rock and roll from there. So it's trying to make a decent it's trying to make a decent move. And my thing is, we'll see where it takes us from there. We do have an opportunity, but I do like QQQ a lot, and we can go from there. Yeah, took an L yesterday. Took an L on some swings. My thing is, you do have an opportunity to bounce back. Don't let one day determine your progress moving forward. All right, so win, lose, or draw, we got to get back out there. We got to continue to keep on grinding. All right, so we'll see where the market takes us from here. Like I said, I'm on here trying to get on a little bit early, see what we can catch and see if we can get the market moving. But like I said, at 2 o'clock, they will release the minutes and their decision. And then at 2:30, Mr. Powell does speak. So I think is we'll see if we can catch him live. If we can't catch him live, I think we'll try to get into a decent trade that's actually going to benefit us. So you guys have any questions, put it in the chat, ladies and gentlemen. You guys have any questions, put it in the chat. Always feel free to ask questions. Like I said, the police car is just to monitor support area. If we do break back down and we break below support area, we in trouble. We in trouble. We break below support area. We in trouble, ladies and gentlemen. So if you guys have any questions, put it in the chat. Put it in the chat, ladies and gentlemen. Put it in the chat. Feel free to put it in the chat. I'm announcing a few plays that I'm looking at we should be trading. My thing is, if you like to set up on it, take the trade. If you don't like to set up, you can actually just monitor and you could just watch. The whole market has pretty much been bloody. Everything has pretty much been taking taking a hit. So we'll see how the market turns around, man. We'll see where we can go from there. So this is a 2-minute time frame, but if you look on a 15-minute time frame on SPX, we did bounce off the police area. And then my thing is, we did try to retest it, but since then we've been in a complete uptrend from there. So my thing is, I like the way it's moving, and we'll see if it actually continue to keep on moving in the up direction. If so, we could do 4,930 calls to the upside, same day expirations, and then we can trade a few different plays on QQQ from there though. But the 15-minute looks pretty good. I even like the 30-minute looks really good. We could have traded off a 3-bar as well. 1-2. Once we broke above, we could have traded at 48.86. Would have been a $4 push from there. So I pretty much been monitoring on the 2 minutes, seeing how the institutions is dibbling and dabbling, coming in and out of the market. I do got the flagpole to see where they actually shorted it. And my thing is, let's see if they take it back down to this area of 48.85. So we might get a $5 push to the downside here. So let's rock, let's roll, ladies and gentlemen. Let's rock and roll. Remember, ladies and gentlemen, be respectful to each other. Ask questions. Always ask questions. Give me time to answer your question, or somebody inside of the chat might be able to answer your question as well. So just give it time and just be a little bit patient. I think a lot of people don't have patience. Be a little bit patient, ladies and gentlemen. Be a little bit patient. So we watching SPX, watching like a hawk. This is a 2-minute time frame. So a few plays that I want to give you guys out while we're here, so you guys can already have them locked and loaded. On QQQ, when we break above, ladies and gentlemen, we're looking to break above 421. Once we break above 421, we can take calls to the upside same day, 422. QQQ, once we break above 421, we can take 422 calls same day action to the upside. Now SPX, we got a few plays on SPX. Let me give these plays out real quick. So let me drop this to a 5-minute time frame. Let me autofocus it. So SPX, we do got 49.30. If we break above, ladies and gentlemen, break above 48.95, 48.95, we could take the 49.30 same day expiration. Now, on the opposite side, if we break to the downside, if we break back below today's low of 48.78, we're going to take 48.60 to the downside. Those are the plays. Then another play on QQQ to the downside as well. If we break QQQ coming to the downside, I want you guys to be very, very patient and observant. If we break below 119.20, 119.20, we'll take the 118 to the downside. If we break up below 419.20, we'll take 418s to the downside. Same day expirations. So my thing is, we just got to be patient. See what the market gives us. See what Powell is talking about. See if he's going to uplift the market or he's going to actually start to decay in the market and the market's going to start falling apart. All right. So we do have an advantage. We don't have to trade if we don't like the setup. We don't have to put any money in if we don't like the setup, ladies and gentlemen. That's one thing that we do have an advantage of. We don't have to trade. All right. Thank you guys for viewing. I'm on here for a minute with you guys, man. I really appreciate you guys. You guys can be doing anything else with your time. Like I said, we consistently keep getting hit off this resistance. I think this is previous levels of resistance, and we do got a level of support we need to break to the downside, but we shall see. Like I said, the police is staking out. And if we do break below this level, 48.78, the low of the day, all bets are off. We completely probably slide to the downside, and that would give us an opportunity to actually trade and put us in a position to be successful. So feel free to ask questions, ladies and gentlemen. Feel free to ask questions. And another thing, hopefully you guys was able to catch Starbucks. I know I gave you guys a $90 put to the downside. Starbucks did run up to 98.36, and we did actually collapse all the way back down to 93.11. So that was an opportunity to trade her from upside to the downside. So that was beautiful. That was well timed. Even in pre-market, she was pretty much at 99, $99. My thing is she was pushing, which is crazy. So that's what I liked about it. And then my thing is when the market opened, she completely failed. Because if you drop it to the 30-minute time frame, you did have the opportunity to trade the 3-bar setup, 1, 2. Once we broke up right here at 9 o'clock, so you know when the market opens up at 9:30, you know we could have took strictly push to the downside. If they cut rate, that's going to be completely bullish. That's going to put people in a driver's seat to be able to get in the market and trade it completely to the upside. So be looking out for that. So my thing, we're looking for them to cut rates. My thing is we got to make sure that they got enough information to actually cut rates, and it could benefit their pocket. So my thing is they still want to run off their balance sheet. So they still got trillions of dollars in the balance sheet. So I know they want to run that off as well. So that was a great question. So we'll see what the market gives us, man. Like we a little bit patient. It's about to be actually 2 o'clock. So the Fed minutes will come out, ladies and gentlemen. If it's positive, it's good. We'll see a movement in the market soon. Market will shift. So we'll see what the market gives us from that point of view. That was a great question. I really like that question. That was a great question. If they cut rates, more than likely people are looking for them to cut rates. So we'll see how it actually pan out from there. Like I said, 2 o'clock hit. We got this major candlestick. It did come in, but we'll see what happens here. Boom. Candlestick came in. We dropped at 243. Y'all see how that works? That candlestick is major. So my thing is, let's make sure we take full advantage of what's going on. All right. That candlestick came out. Wow. You guys see that 2 o'clock candlestick? Tremendous. Tremendous candle, ladies and gentlemen. That's what it's about. Just being patient. Tremendous candle. So we'll see what they continue to keep on bringing us. This is what I like about the market. My thing is, big candlestick at 2 o'clock came out, showed its true colors, and then my thing is she's rocking and rolling from there. Right? Boom, bag drop. So my thing is that's just how you rock and roll. You know, you get into this market, you look for things like that. The setup is there, the trade is there. You just got to be willing to take the trade. All right. The game is the game, man. That was just beautiful. I was able to catch it. I was able to catch those plays, man. I catch a put. So that was the easy little $400 off the table. Now we'll see where the market goes from here. But that 2 o'clock candlestick came out, as you guys can clearly see. It was completely to the downside. We did get some wick action afterwards, but that was a nasty drop to the downside. So my thing is lights out. Remember I told you, ladies and gentlemen, we did pretty much break the low of the day. And we created a new low, 48.73. And all bets are off, man. I really like the way that looked, man. That felt pretty good. So my thing is, let's see if this can continue. So I do like the QQQ 418 puts. So my thing is, let's see if we can rock and roll from there. All right. Any questions? Put it in the chat. I gave you guys the plays that I'm rocking and rolling with. Gave you guys the plays that I'm rocking and rolling with. All right. So that was beautiful, man. I really like to see things like that. And then she's continued to keep on collapsing to the downside. So that was a beautiful play. So my thing is, we know what it takes to actually be a trader. We know what it takes to take profit off the table. So that was well played. Well played, ladies and gentlemen. That was well played. Now, happy that you guys was able to see that on live, because a lot of times people are not able to see that move. So they're not able to anticipate what's really going to happen. But like I said, we consistently kept hitting this level of resistance here. So my thing is, once we broke that, it was lights out. And then my thing is, don't be afraid. On the opposite side, we might get that rally back up. And and all fair honesty to the market, it happens like that. It happens like that. So my thing is, don't be afraid to get in this market and trade. Because now you go, we pushing back up. All right, so we'll see what the market holds, ladies and gentlemen. All right, so let's see if we can recover over the next few minutes. It's giving it back, ladies and gentlemen. It's giving it back. You got to be fast. You got to be quick. You got to be on your feet. My thing is, you can't sit around. You can't be impatient. All right, so let's see what she does, ladies and gentlemen. But that 2 o'clock candlestick came out, and it sunk the boat. My thing is, it sunk the boat. So you just got to be patient with her. I gave you guys the targets. Now you got to focus on your patience. And my thing is, and let your skill set do the talking. Here we go, ladies and gentlemen, patience. Patience. There we go, ladies and gentlemen. It's given and it's taken. So the 4,900 calls is what I really like to the upside. Let's see if we can spill the beans. We did push back up. That was a nice little rally, 11-point rally, right? So remember I told you guys when we're looking at these bars, man, we want to make sure these bars make sense to us. We do have a 3-bar, 1, 2. Once we broke above, we did rally back up, but we got to be a little bit patient. Patience is key. Let's try to be patient. All right, we do have an opportunity here, ladies and gentlemen. Like I said, that candlestick that came out at 2 o'clock changed everybody's mind frame. You just had to be patient. You got to be willing to wheel and dealing. All right. So my thing is sometimes you just need one trade, and if you're not able to catch the move like you want to catch the move, don't trade it. Here we go, ladies and gentlemen. It's back and forward. She's trying to retest the lower today. All right, let's see if it's gonna give and take for us. Them 490 contracts, I'm looking to get filled to the upside. I'm looking to get filled here soon. I got limit order in at 410. Let's see if they fill them. Let's rock and roll, ladies and gentlemen. Let's rock and roll. They was able to fill my order. I'm currently in profit. Let's see if we can actually continue to tick up just a little. If I do get a 10 to 15 point rally, ladies and gentlemen, I will feel comfortable taking that bag off the table. Let's see if we can rally up. All right, so we got the next candlestick that came out on a 2-minute time frame. I want to be able to look at this 10-minute time frame. My thing is, yeah, it was a complete drop. 15 minute as well. 5 minute, we'll see what's going on with the 2 minute time frame is painting us a picture. We'll see if we can actually break back above 48, 78, 50, and see if we can hold above that. If we can hold above that, I still feel comfortable in the 4900s. If not, I already got my trail stop loss set into place. So my thing is I'll be able to get out of that trade with a small amount of loss. So was able to make money on that down tick, ladies and gentlemen. Just had to be prepared, being ready. So we'll see what's rocking. We'll see what Mr. Powell want to talk about. We'll see what he want to do, and then we can rock and roll from there. What time is it? 14:08. So it's almost 2:10. We back and forth, ladies and gentlemen. This is on a 2 minute time frame. 5 minute time frame. Not that much action. We completely to the downside. 15 minute as well. So that's the game. Like I said, I like the move. The initial move was to the downside. We'll see if we can pivot and we can move to the upside. All right, and then we can rock and roll from there. Anybody got any questions, put it in the chat. Put it in the chat. Thank you guys for joining the YouTube live. My thing is the whole objective to get on here. I'm up $80 a contract on the 4,900 calls, same day expiration. All right. 40 a contract. It's ticking up, it's ticking down, it's ticking up, it's ticking down. So my thing is I'm willing to take it at $200 a contract profit. I don't care where it goes after I get in and get my bag. So 4,900 calls same day, $70 a contract. Let's rock, let's rock. Come on, man. Let's see if we can get this push. All right, perfect. It's 2:10. Ladies and gentlemen, we do have a few minutes before Powell get on and start his mumbo jumbo. See what he takes it from there. My thing is if they do cuts, the market does push up, it rallies up. If they don't, we already know what that means for the market. So my thing is, ladies and gentlemen, make sure you guys hit that subscribe button, turn on your notifications, show some love, share the page to family and friends. All right, 2 minute time frame. We did push completely down at 2 o'clock. And pretty much try to get back half. My thing is, let's see if we can continue rally up. Each contract is worth $100 now. 4,900 contracts. Each contract is worth $100. So, like I said, I'm taking them at $200 profit. I don't care where the market goes after that. I got 4 of them. My thing is, I'm willing to take the 800 off the table. Come on, let's see if we can rally. All right, let me switch these candlesticks. So my thing is, let's try to see if we can make it a little bit simple for people. All right, these candlesticks are showing that it's completely down. My thing is we need these blue candlesticks to pop up so we can feel a little bit comfortable. Like I said, we just stuck in this range right now. But my thing is the initial pop was at 2. So initial pop was at 2. So any questions, put it in the chat, ladies and gentlemen. Any questions, put it in the chat. My thing is, ladies and gentlemen, remember, if you take a trade, make sure that the trade fits your capital level and your emotions. This the game. 115 a contract. So my thing is, let's see if we can rally back up. 135 a contract. So my thing is, they are in profit at 4,900, ladies and gentlemen. 165, 170 a contract. So my thing is, let's rock and roll, man. Let's get to it. Let's get to this bag. 170. So my thing is, they're picking up self-esteem. They're picking up profit. So my thing is, your goal is to be profitable. You know what I'm saying? You're not here to look to be the best trader. You're just here to be profitable. And you want to continue to keep on compounding those wins. Make sure you guys hit that like button. Leave a comment. If you guys took the 4,900 calls with me, congratulations. If you guys took those QQQ calls to the upside, congratulations. And my thing is, you could have took the 4930 calls as well. My thing is, you still be in profit on those. So let's rock, let's rock, let's roll. We got 9 people online. Hit the like button, ladies and gentlemen. Share with family and friends. Let's see if we can get back to 48.90. Let's see if we can get this 8-point rally. All right, we've been rallying from the bottom as well, man. We came from 48.72. I think we back to 48.82. So my thing, we did do a 10-point rally. So we did fall at 2. And my thing is we recovered. So let me draw this support here so you guys can understand. The police were just sitting there. I like to just say the police was staking out. All right. Them contracts is 180. When they hit 190, like I said, when they hit 200 a contract, I'm out. You know what I'm saying? I'm not going to stay around and party. I already didn't party. All right. We are forming makeshift cup and handle. Let's see if we can continue that. All right. Let me switch these counters to show you. When I told you guys we need to turn back blue, we did turn blue. So my thing is, let's see if we can continue to keep on rallying up. Let's see what they're going to bring to the table, ladies and gentlemen. Let's see what they're going to bring to the table. If you guys are inside my masterclass, I appreciate you guys. I really do. Appreciate you guys. Like, I enjoy you guys. We just got that rejection. So my thing is, we got that rejection. So we'll see if that rejection continues, or we'll see if we rally back up. But my thing is, we caught in the crosshairs. Like I said, we do have a stakeout. So the law of the day, we do have a stakeout. We do have at least we know where our resistance lies, our support lies, right? And then there we go. Let's try to come back to that area. Remember, ladies and gentlemen, you don't have to be the best trader. You just got to be profitable. Here we go, ladies and gentlemen. It's coming back. It's breaking down. Look at the time. It's 2:15. It's coming down, 2:15. So if you guys can look at the counter, we had 2, 4, 6, 8, 10, 12. We pretty much had almost a 15-minute rally. And then my thing is this one candlestick on the 2-minute is pretty much trying to take it all back. That's why you got to be in and out, right? You got to be willing to take the profit off the table. Because my thing is, if you look at these candlestick structures, we did get a hammer. It did push up. My thing, we got pretty much a Miraboji, a strong candlestick to the downside that wiped everything out, which was almost a $5 candlestick. Right? That can be the difference between a winning and a losing trade. Just one candlestick. So you clearly can see that we formed. Let's switch this to the 1-minute time frame so you guys can see it. 1, 2, we got this 3 bar in 1 minute. 1, 2, my thing is put 48.82. You could have took them. You could have took a $4 drop to the downside. You know, it's not hard, ladies and gentlemen. You just got to be patient and you got to be practical, right? And then sometimes you got to be surgical in the market, right? I don't think people really undergrasp that concept. You got to be very, very delicate, right? It's like you working on the brain. So my thing is you want to have steady hand and you want to know your anatomy. So you want to know candlesticks anatomy. You want to know why the market is moving and when the market is moving. So this is on a smaller time frame. This is the 1 minute. We'll see if we can get that jump back up to 48.83. And if we can get the jump back to that, ladies and gentlemen, those contracts will be beautiful. All right. So hopefully you guys took some bread off the table and you're enjoying yourself. All right, so I'm gonna bring it to you guys when Powell is live. Show you guys. We're gonna watch it live 2:30. So he's not live yet. All right. So we're gonna try to take advantage of that when he come live. So looking forward to it. Looking forward to it, ladies and gentlemen. Looking forward to seeing what he got to say, and then we can go from there. Now the Feds basically said they ain't gonna hold it steady. They're not looking at no cuts no time soon. So I think this market can actually flush to the downside, ladies and gentlemen. 4,800, 4,440. Puts seem pretty cool. Let's rock out, ladies and gentlemen. Let's make some money. Let's get into it and make some money. Let's see what this market takes over the next 7 to 8 minutes. We'll see where it goes from there. Now, if we're doing those type of plays, we want to swing them into tomorrow. Swing them into tomorrow. I don't think they have any confidence in the economy. My thing is, I don't know why they keep holding the interest rate the way they're holding it. They need to go ahead and cut it. Put people back in position, especially average workers in America, in position to be successful. At this rate, pretty much everybody in America that's supposed to be an average citizen might go bankrupt because this is it's insane. The amount of pressure that people have, the price of food, clothes, and shelter, and things like that. So let's see where it takes us, ladies and gentlemen. I'm gonna let you guys know. We do have literally 9 minutes to Powell come on. He usually show up on time, so my thing is hopefully he's on time today, and he can sway the market, and then we can take full advantage. Give and take, ladies and gentlemen. The market will give and the market will takes. So when you are in a position that's given to you, please take the profit. All right, we got 8 minutes to Powell comes on. 8 minutes. How you guys feeling today mentally and physically? Hopefully you guys are feeling well. You know, the initial move is to the downside, so I think they want to continue that rally to the downside, ladies and gentlemen. That's the initial move. We just just created a new low today. Everything is to the downside. So if you guys took the 4840s, 4800 for tomorrow, you guys are in profit. Congratulations on that, ladies and gentlemen. Congratulations. That's good. That's good, Todd. That's good. That was just pretty much an easy play, bro. I had rolled it up, took a couple hundred. Actually going down. And we should be able to take a bag off the table as well. So we just gotta be patient. My thing is she did try to recover from the bottom, but my thing is she only recovered 50% of what she lost. So we can go from here. You trade anything, or you just watching, you observing? And like I said, boy hit the 210. I did have the 210 calls to the upside, and plus I did have puts to the downside. Puts got killed, calls was pretty decent, right? That's good. That's good. You should wait it out. But everything else is getting killed to the downside. So don't wait too long. Don't miss that opportunity, because SPX just dropped literally $11. So that means SPY dropped $1. So you can't wait too long for the trade. Sometimes you can wait too long for the perfect setup, and the setup was there all along. But Boeing defined all the odds. What's really going on with that company? So I really ain't like how that was. That was crazy. Yeah, so my thing is with the Feds holding rates like that, man, I just think that it's crazy. I don't know what more they're looking to get out of the people. I don't know more what they're looking. That's so true, actually. Could have been paid and done. Yeah. It depends on how many contracts you took. Yeah. That's a fact. That's a fact, bro. But we'll see what Mr. Powell get up here and talk about. We do have literally under 6 minutes. We'll see what he's talking about. We'll see what Mr. Powell is talking about. Like I said, ladies and gentlemen, 4830, 4800, 4840 for tomorrow. If we do break to the downside, it gives you an opportunity to make a bag. And then the 4900 was the call to the upside. So I was there to take a lot of those off the table. It didn't quite hit 200 a contract. It hit 190, but I was able to get out at 175. And then, by the way, ladies and gentlemen, I did get clapped on some swings. So, just being transparent, I got clapped on some swings. It wasn't pretty. It wasn't pretty at all. It was a bad feeling. All right, ladies and gentlemen, we do got 4 minutes before Mr. Powell comes up to the podium. We do have 4 minutes. So we'll see if they want to rally the market, see if they want to drop the market. But it's like they're not giving any clues on do they want to drop interest rate anytime soon. So we'll see how we can go from there. Appreciate the likes, ladies and gentlemen. Appreciate the likes. I'm expecting for this thing to rally back up and bust through 48.83. Looking forward to rally back up. So let's see if we can actually bust through that area. We got 3 minutes to Powell come up to the podium. Three minutes, ladies and gentlemen. 3 minutes. 2 minutes and 30 seconds. Remember, ladies and gentlemen, Fed days, you do have movement at 2, so I don't know why nobody wasn't anticipating on a move like that. We was on the right side of the coin, and it did pay off, right? Just being on the right side when it matters is the only thing that matters. We literally got 2 minutes, 6 seconds. Right, like I said, we consistently keep getting this rejection. I think the initial move is to the downside. I think that's why they want to take it. And we'll see if we can actually take full advantage of that as well, right along with them. The 4830 push for tomorrow, they're currently at 445. And if we do rally back up, I think that we can actually eclipse 350 a contract. And then that would be a good position to actually look to actually get in a trade. All right, minute and 20 seconds. Anybody got any idea what Powell is going to talk about? Anybody got any idea? Do y'all think that he's going to do mumble jumble, or you think he's going to lay the cards out on the table? Anybody got any idea on that? Hopefully he's transparent. Hopefully he's honest. Hopefully he's upfront. Hopefully he can prove his point or his case, and we can get things on track. We can get the ball rolling. But one thing that we should accept as citizens and as people paying taxpayer dollars is mediocre. We should be treated fairly, and we should be given truthful information that actually can help us and help our family thrive. I know they give us the bits and pieces, but make sure the bits and pieces are honest and are true statements. All right, 15 seconds. We'll see if Mr. Powell steps up to the podium, and then we can go from there. I'm there waiting, Mr. Powell. They're waiting the man of the hour. They are waiting the man of the hour. They are waiting the man of the hour. The man of the hour, y'all. The man of the hour. Let's see what this man got to say. Let's see what this man got to say. The man of the hour, y'all. The unchanged interest rate. We're pushing, ladies and gentlemen. We're pushing. We might not get no pop until after he speak, ladies and gentlemen. We might not get a pop. We getting a drop on SPX on a 1 minute, ladies and gentlemen. We got a drop.
Policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess the incoming data, the evolving outlook, and the balance of risks. The committee does not expect that it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%. We will continue to make our decisions meeting by meeting. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
From the New York Times, thanks for taking our questions. Obviously, in the statement and just in your remarks there, you note that you don't want to cut interest rates without greater confidence that inflation is coming down fully. I wonder, what do you need to see at this point to gain that confidence? And as you make those decisions, how are you weighing recent strong growth in consumer spending data against the sort of solid inflation progress you've been seeing?
Sorry, say the last part.
How are you weighing the growth data and consumption data, which have been surprisingly strong, against inflation data?
Okay. So what are we looking for to get greater confidence? Let me say that we have confidence. We're looking for greater confidence that inflation is moving sustainably down to 2%. Implicitly, we do have confidence and has been increasing, but we want to get greater confidence. What do we want to see? We want to see more good data. It's not that we're looking for better data. We're looking at continuation of the good data that we've been seeing. And a good example is inflation. So we have 6 months of good inflation data. The question really is, that 6 months of good inflation data, is it sending us a true signal that we are in fact on the path, sustainable path down to 2% inflation? That's the question. And the answer will come from some more data that's also good data. It's not that the 6-month data isn't low enough. It is. It's just a question of, can we take that with confidence that we're moving sustainably down to 2%? That's really what we're thinking about. In terms of growth, we've had strong growth. If you take a step back, we've had strong growth, very strong growth last year, going right into the fourth quarter. And yet we've had a very strong labor market, and we've had inflation coming down. So I think, whereas a year ago we were thinking that we needed to see some softening in economic activity, that hasn't been the case. So I think we look at stronger growth. We don't look at it as a problem. I think at this point we want to see strong growth.
Calls is running, ladies and gentlemen. Calls are in profit completely.
to continue to come down.
$400 a contract.
Coming down for the last 6 months.
And I'm sorry if I could just follow up very quickly. When you say that you want to make sure that it's a true signal, is there anything that you're seeing in the data that makes you doubt that it's a true signal at this stage?
I think I would say it seems to be the likely case that we will achieve that confidence, but we have to achieve it and we haven't yet. And so, I mean, it's a good story. We have 6 months of good inflation, but you can, and you know this, you can look behind those numbers and you can see that a lot of it's been coming from goods inflation, for example. And goods inflation running significantly negative. It's a reasonable assumption that over time, goods inflation will flatten out, probably approximate zero. That would mean the services sectors would have to contribute more. So, in other words, what we care about is the aggregate number, not so much the composition. But we just need to see more. That's where we are as a committee. We need to see more evidence that sort of confirms what we think we're seeing and that tells us that we are on, gives us confidence that we're on a path to a sustainable path down to 2% inflation.
Nick Timmer of the Wall Street Journal. Chair Powell, it seems to me you raised rates rapidly over the last 2 years for 2 reasons. One was the risk of a wage price spiral. 2, there were risks of inflation expectations becoming unanchored. This morning's ECI report for the fourth quarter shows private sector payroll growth running at a sub 4% pace. Inflation expectations are very close to where they were before the inflation emergency of the last 3 years. And given that you appear to have substantially cut off these 2 tail risks, and that you've judged year-to-date current policy is well into restrictive territory, what good reason is there to keep policy rates above 5%? Are you really going to learn more waiting 6 weeks versus 3 months from now that you have avoided those 2 risks?
So, as you know, almost every participant on the committee does believe that it will be appropriate to reduce rates. And probably for the reasons that you say, we feel like inflation is coming down. Growth has been strong. The labor market is strong. What we're trying to do is identify a place where we're really confident about inflation getting back to 2% so that we can then begin the process of dialing back the restricted level. So overall, I think people do believe it. As you know, the median participant wrote down 3 rate cuts this year. But I think to get to that place where we feel comfortable starting the process, we need some confirmation that inflation is in fact coming down sustainably to 2%.
If I could ask differently, if you hold rates high as inflation moderates, as it has been, target rates will exceed the prescriptions of the Taylor Roller experience. What would be the reasoning for holding rates higher than the levels recommended by those rules in the current instance?
Well, look, I think, as you know, we consult a range of Taylor rules and non-Taylor kind of rules. We consult them regularly. They're in our Teal book and they're in all the materials that we look at. But I don't think we've ever been at a place where we were setting policy by them. And depending on the rule, it will tell you different things. There are many different formulations. Another way to think about it is implicitly so in theory, of course, real rates go up if holding all else equal as inflation comes down. But that doesn't mean we can mechanically adjust policy as as inflation comes down. It doesn't mean that at all because, for one thing, we don't know. We look at more than just the Fed funds rate. We look at broadly financial conditions. But in addition, we don't know with great confidence where the neutral rate of interest is at any given time. But that also doesn't mean that we wait around to see the economy turn down because that would be too late. So we're really in a risk management mode of managing the risk, as I mentioned in my opening remarks, managing the risk that we move too soon and would move too late. And I think to move, which is where almost everyone on the committee is in favor of moving rates down this year. But the timing of that is going to be linked to our gaining confidence that inflation is on a sustainable path down to 2%.
Hi, thanks, Chair Bell. I'd like you to key in on the use of the word in the statement that inflation still remains elevated. You pledged to cut rates before inflation reached 2%. So that implies that there's some sort of intermediate step here on inflation, and that a cut would be consequent with a change in the statement language that inflation remains elevated. What's the step down from there?
Yeah, I don't know that we worked out the particular statement language and that kind of thing. I would just say, if you look at where 12-month inflation is, and it's it's still well above core is 2.9%, for example, 12 months, which is way down from where it was. Very, very positive development, very fast decline, and the case is likely that it will continue to come down. So that's where it is. But we're wanting to see more data.
So if I could follow up on that, the statement allows that you want greater confidence on inflation falling before you cut, but it doesn't mention the other side of the mandate, a slide in employment. Would a slide in employment also bring you to the point of cutting rates?
Yes. So let me say that we're not looking for that's not something we're looking for. But yes, if you think about in the base case, the economy is performing well, the labor market remains strong. If we saw an unexpected weakening in certainly in the labor market, that would certainly weigh on cutting sooner. Absolutely. And if we saw inflation being stickier or higher or those sorts of things would argue for moving later. In the base case, though, where the economy is healthy and we have ongoing growth, solid growth, we have a strong labor market, we have inflation coming down. That's what people are writing their SEP around. And in that case, what we're saying is, based on that, we think we can and should take advantage of that and be careful as we approach that question of when to begin to dial back restriction.
Claire Jones, Financial Times. Just to circle back to the greater confidence aspect of the statement, there's been a lot of unanimity in recent meetings. I'm just wondering, going forward, when it comes to all needing greater confidence, is the unanimity, or at least consensus among FOMC members, about what the threshold for that greater confidence is? And if not, could you maybe tell us a little bit about the discussion today on what the variations between FOMC members was on what constitutes enough confidence to cut rates, and also if there was any variation on how quickly that greater confidence threshold could be reached. Thank you.
We're not really at that stage. There was no proposal to cut rates. Some people did talk about their view of the rate path. I would point you to the SEP as good evidence of where people are, although it is one cycle later. So we're not at a place of really working out those kinds of details because we weren't actively considering moving the federal funds rate down. I will say there is a wide disparity, a healthy disparity of views, and you see that in public statements, in the minutes, and the transcripts when they're released every 5 years. So we do have a healthy set of differences, and I think that's actually essential for making good policy. We're also able to reach agreement generally because we listen to each other, we compromise, and even though not everybody loves what we do, they're able to, for the most part, able to join in. To me, that's a well-functioning public institution.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. So over the past few years, there have been all these real-time indicators that helped us gain a sharper understanding of where the economy was, like open table data or office attendance. You've talked about vacancies in the past. And I'm wondering, at the start of this year, what might be on that dashboard for you that's giving you the clearest picture of the economy, including on rents, if you could touch on that.
Including
Rent costs.
Yeah. Well, so we're not, it's not the pandemic, so we can actually rely on more traditional forms. People are working, they're getting wages, and the economy is largely reopened and is broadly normalizing, as you see. So I wouldn't say we're looking at that sort of more innovative data as much. You point to rents, so of course we follow the components of inflation very carefully, which would be goods inflation. I talked about that a little bit. You mentioned housing inflation, so the question is, when will these lower market rents find their way into measured rents as measured in PCE inflation? And we think that's coming. And we we know it's coming. It's just a question of when and how big it'll be. So that's in everyone's forecast, I would say. So that will help. But at the same time, we think goods inflation will probably, it's been giving a lot of disinflation to the effort, and probably that declines over time. But it may well have some more time to run. You know, the supply chains are not perfectly back to where they were. In addition, it takes time for the healing process to get into prices. So there may be still a tailwind. We'll find out with that. So we look at the things that relate to our mandate very carefully, and as you would imagine.
I guess just as a quick follow-up, do you feel comfortable at this point saying the economy has reached a soft landing, or is that part of looking for more confidence?
No, I wouldn't say we've achieved that, and I think we have a ways to go. Inflation is still, core inflation is still well above target on a 12-month basis. 12 months is our target. Certainly, I'm encouraged, and we're encouraged by the progress, but we're not declaring victory at all at this point. We think we have a ways to go.
Thank you, Mr. Chairman. You said that you would know the neutral rate by its works. So I'm wondering what you could tell me. How do you believe the neutral rate is working? We're telling you right now that growth is stronger. In other words, how much is the economy really being restrained right now by the current funds rate? And how much restraint does it really need additionally if inflation is still coming down?
So I think you do see in the interest-sensitive parts of the economy, you do see, for example, housing, you see the effects. You do. Your second question, though, really, I think is important, and that is a lot of this has come through, a lot of the disinflationary process has come through the healing of supply chains and also of the labor market. So you've seen that other set of factors is really different from other cycles and has brought that, working with tighter policy, which has enabled the supply side to recover, I think is that mixture has been behind what has enabled this. So no, we really do think that we're having an effect broadly across the economy. I would point to the interest-sensitive parts of the economy as well as spending generally. But it's a joint story. It's a complicated story.
But how much restraint are you actually imparting to the economy, would you say, relative to the neutral rate?
I think it's of course, you know that it's not something you can identify with any precision, but the standard approach would be to take the nominal rate, 5.3%, let's say, and subtract sort of a forward measure of inflation. If you do that, and there are many, many ways to calculate the neutral rate, but that's one I like to do. And you're going to get to something that is materially above mainstream estimates of neutrality, of the neutral rate. You will. But at the same time, you look at the economy and you say this is an economy that grew 3.1% last year. And you say, what does that tell you about the neutral rate? What's happening, though, is the supply side has been recovering in the middle of this. So that won't go on forever. So a lot of the growth we're seeing it isn't just a tug of war between interest rates and demand. You're getting more activity because of labor market healing and supply chains healing. So I think the question is when that peters out, I think the restriction will show up probably more sharply.
Thanks for taking the question, Mr. Chairman. You mentioned earlier we're not seeking a weaker labor market. I think that you said. Can you talk a little bit more about that? Do you think the labor market now is back to quote unquote normal, and that we can achieve the inflation target without wage gains coming back down to what they were pre-pandemic? Even with today's ECI levels, they were still above those pre-pandemic levels.
I think the labor market by many measures is at or nearing normal, but not totally back to normal. And you pointed to one or more of them. So I think job openings are not quite back to where they were. Wage increases rather are not quite back to where they would need to be in the longer run. I would look at it this way though. The economy is broadly normalizing, and so is the labor market. And that process will probably take some time. So wage setting is something that happens. It's probably will take a couple of years to get all the way back, and that's okay. That's okay. But we do see. You saw today's ECI reading. The evidence is that wage increases are still at a healthy level, very healthy level, but market. They're gradually moving back to levels that would be more associated, given assumptions about productivity, are more typically associated with 2% inflation. And it's an ongoing process, a healthy one, and I think we're moving in the right direction.
So that process can continue without a weakening of the labor market, basically, that you're saying.
Well, I think the labor market it's rebalancing. Clearly, there was a fairly severe imbalance between demand for workers and supply at the beginning of the pandemic. So we lost several million workers at the beginning of the pandemic from people dropping out of the labor force. And then when the economy reopened, you remember 2021, you had a severe labor shortage, and it was everywhere. Panic on the part of businesses, couldn't find people. So what's happened is we expected the labor market to come back quickly, and it didn't. And 2022 was a disappointing year, and we were kind of thinking, well, maybe we won't get it back. And then 2023 we did, as you know. So labor force participation came back strongly in 23, and so did immigration. Immigration came to a halt during the pandemic. So those two forces have significantly lowered the temperature in the labor market to what is still a very strong labor market. It's still a good labor market for wages and for finding a job, but it's getting back into balance, and that's what we want to see. And one great way to look at that is what's happening with wage increases, and you see it now across the major things that we track. It isn't every quarter, but overall there's a clear trend, still at high levels, but back down to what would be consistent with where we were before the pandemic and with 2% inflation.
Hi, Chris Rugaber, Associated Press. Thank you. I wanted to follow up on Rich's question. It sounded like you suggested that you're not worried about faster growth so much. So wanted to see if you're seeing anything that suggests that inflation could re-accelerate from here. And it sounds like you're saying you're not worried that solid growth from here on out poses any risk to inflation. Thank you.
No, I think that is a risk. The risk that inflation would reaccelerate. I think the greater risk is that it would stabilize at a level meaningfully above 2%. That's to me more likely. Of course, if inflation were to surprise by moving back up, we would have to respond to that, and that would be a surprise at this point. But I have to tell you, that's why we keep our options open here, and why we're not rushing. So I think both of those are risks, but I think the more likely risk is the one that I mentioned, which is you've had 6 good months, very good months, but what's really going to shake out here? When we look back, what will we see? Will inflation have dipped and then come back up? Are the last 6 months flattered by factors that are one-off factors that won't repeat themselves? We don't think so. We don't. It's not what we think, but that's the question we are asking. We have to ask, and we want to get comfort on that.
And just one quick follow-up. Governor Waller had mentioned the revisions that are coming on February 9th for the CPI data. Is that something you're watching as well? And if we see those revisions fairly minor, is that going to give you more confidence where things are going?
We'll just have to see. We look at those. Last year was a surprise.
Michael McKee, Bloomberg Radio and Television. If you don't want to use the term soft landing, would you say at least that from your point of view now, the other scenario of a hard landing caused by the Fed is off the table, or the risks have diminished very much? And you mentioned below 2% inflation on a 3-month basis. Core PCE has been running at 1.5%, and there are those on Wall Street who think that if you maintain the level of restriction you have right now, you could end up with inflation running below your target. How do you see that?
So your first question, how to describe where we are. So I guess I would just say this. The executive summary would be that growth is solid to strong over the course of last year. The labor market, 3.7% unemployment, indicates that the labor market is strong. We've had just about 2 years now of unemployment under 4%. That hasn't happened in 50 years, so it's a good labor market. And we've seen inflation come down. We talked about that. So we've got 6 months of good inflation data and an expectation that there's more to come. So this is a good situation. Let's be honest. This is a good economy. But what's the outlook? That's looking in the rearview. The outlook, we do expect growth to moderate. Of course, we have expected it for some time, and it hasn't happened. But we do expect that it will moderate as supply chain and labor market normalization runs its course. The labor market is rebalancing, as I mentioned. Job creation has slowed. The base of job growth has narrowed. And of course, 12-month inflation is above target and getting down closer to target. It's not guaranteed, but we do seem to be getting on track for that. So those are the risks and questions we have to answer. But overall, it's a pretty good picture. It is a good picture. Your second question was, sorry.
Could you get inflation that is below target, end up with inflation below target, and you have to do something about that?
So the thing is, we're not looking for inflation to tap the 2% base once. We're looking for it to settle out over time at 2%. And the same thing is true if we have a month or two of lower, and we have that now, of inflation that's annualized at a lower level. That wouldn't be good. We're not looking to have inflation anchor below 2%. We're looking to have it anchor at 2%. So if we do face those circumstances, then we'll have to deal with that. I think as of now, the question which we want to take advantage of this situation and finish the job on inflation while keeping the labor market strong.
Edward Lawrence from Fox Business. Thank you, Mr. Chairman, for taking this. So as I've heard from some district Fed presidents, is it, in your view, a little premature to think that rate cuts are right around the corner? And then when we do see that first rate cut, should we interpret that as the beginning of a rate cut cycle, or is it a one-off?
So I'll point you to that language on your first question. We included that language in the statement to signal clearly that with strong growth, strong labor market, inflation coming down, the committee intends to move carefully as we consider when to begin to dial back the restrictive stance that we have in place. So if you take that to the current context, we're going to be data dependent. We're going to be looking at this meeting by meeting. Based on the meeting today, I would tell you that I don't think it's likely that the committee will reach a level of confidence by the time of the March meeting to identify March as the time to do that. But that's to be seen. So I wouldn't call it, when you ask me about in the near term, I'm hearing that as March. I would say I don't think that's probably not the most likely case, or what we would call the base case.
There we go, y'all. We got that drop we've been waiting for.
Is the start of when we see a cut, is it the start of a cutting cycle, or could it just be one-off?
That's going to depend on the data. The whole thing is, this is going to depend on the data. We're going to be looking at the economic data as it affects the outlook and the balance of risks, and we're going to make our decisions based on that. And it could wind up, we'll have another SEP at the March meeting, and people will write down what they think. But in the end, it's really going to depend on how the economy evolves. We talked about there are risks that would cause us to go slower. For example, stronger inflation, more persistent inflation. There are risks that would cause us to, or if they happened, it would cause us to go faster and sooner, and that would be a weakening in the labor market, or for that matter, very, very persuasive lower inflation. Those are the kinds of things. So we're just going to be reacting to the data. That's really the only way we can do this.
Hi, Victoria Guido with Politico. Could you talk a little bit more about productivity growth? You've mentioned multiple times about the level of wage growth that's consistent with 2% inflation. We've obviously seen, you were talking about ECI this morning, in which it's cooled a little bit, but still sort of above what you wanted to see. Growth has been very strong. How much of those numbers do you attribute to productivity, and do you see that productivity as sort of just temporary because of the factors, the labor and supply chain factors you were talking about, or do you think that productivity growth will fade over time?
So this is a really interesting question, and I think my own view is, I think if you look back to the pandemic, you saw a spike in productivity as workers were laid off and activity didn't decline as fast. And then you saw a deep trough of productivity. And then over the last, you saw high productivity last year in 23. I think basically in the throes of getting through the pandemic economy, and the question will be, what is it that has changed? The productivity test is based on fundamental aspects of our economy. Is there a case? Will it be the case that we come out of this more productive, more on a sustained basis? I don't know. What would it take? It would take people talk about AI.
Bag drop, y'all. Upside to the downside, bag drop. Hopefully you guys took the plays that I gave earlier and kept it in mind. But whoa, 4860 hit dead on the dot, ladies and gentlemen. 4860 hit dead on the dot.
So I'm not seeing why it would, but right now I would say the productivity is kind of what falls out of the broader forces that are driving people in and out of the labor force and activity returning and supply chains getting fixed.
Right, so would that be behind why we've seen such strong growth, but we've also seen inflation fall, that maybe there's just a higher level of productivity?
That's one way to look at it, yeah.
Yes, sir. Bag drop, bag drop. Thanks, OG. I appreciate it. That was some money, man. Hopefully people took the time in to relax and enjoy it. I'm trying to stay on for a few more minutes for him to wrap up. But I was able to get all my money back from the swings. And now these puts is paying. I'm at 4,800 puts for tomorrow, ladies and gentlemen. 4,800 puts for tomorrow. They cutting up right now.
Maximum employment or price stability, and that's what we're targeting. We're not targeting housing price inflation, the cost of housing, or any of those things. Those are very important things for people's lives,
Y'all see that?
but they're not,
Wow, what a doozy. Remember I told you guys we was parked out. Once we broke resistance where the police was staked out at, everything else was history. Everything else was history. I don't get on here just to talk. I get on here to put you guys in position to be successful so you can fish for yourself. Right, you know what I'm saying? I don't know too many coaches that's going to give you the game and be honest with you and upfront with you, but the police was staked out on the FBI sting. My whole thing, we came in, we made it happen. It broke the 48.73. We down almost $20 from there. So my thing is, congratulations on the winning trade. We rolled her up and we rolled her down. Right? This is Fed Day, ladies and gentlemen. So those 4,800, they up $97 a contract, $100 a contract, ladies and gentlemen. I'm gonna take some profit off the table. I got into 8 of them. I'm gonna take 5 and let 3 rally. That's what I'm talking about. Did you get in? That's a bag drop. That's what I'm talking about. I appreciate you guys watching me, man. Like, this the game. If you inside my Telegram, we try to coach, we try to put you in a position to be successful.
Which is that our job, the job Congress has given us, is price stability and maximum employment. Price stability is absolutely essential for people's lives, and most importantly, not most importantly, mostly for people at the lower end of the income spectrum who are living at the edges.
Right? So that's the game. It's trying to tick back up a little, ladies and gentlemen. My thing is you should have cashed out. You know what I'm saying? Like, hey, credit, debit, or cash. You should have cashed out. Right? It's okay to have some cash before they get rid of it. Cashed out, ladies and gentlemen. Anybody got any questions on that? That was just a cash transaction.
That's how we think about that.
Courtney Brown from Axios. Can you give us some insight into whether the committee discussed the possibility?
Cash out. I know you guys, you know about Cash Money Records. That's what it was. Bag drop Friday. It ain't even Friday. You feel me? Bag drop Wednesday. This the game, man. Like, we just got to take it and chop it up, use it, put us in position to be successful, and then keep it moving from there. It ain't that hard. You know, people want to make it complicated. It's not that complicated. You know, it's not that complicated. Appreciate you trusting me, bro. Appreciate you trusting me. But like I said, the police car was parked. You know what I'm saying? When the feds had their information going on, they parked the car outside your house. They wait on you to bust a move. And then once the car moves, ladies and gentlemen, you do get an opportunity to make your move. So once it broke above it, below it, you had an opportunity to trade in either direction. And we bust their head to the downside. So blessed on that one. Blessings come in many forms, ladies and gentlemen. It might not be money. It might be knowledge. It might be time, right? It might be wisdom. It might be a companion. It might be a partnership or a brotherhood. But this is the game.
Right now, we're thinking about
Win, lose, or draw.
we're going to see the balance sheet run off to continue. We're watching it carefully.
All right? So anybody got any questions about that?
Committee starting in March.
Put it in the chat. Put it in the chat. Man, I just appreciate it today.
So everybody, Rich, with The Economist. Thank you, Chair Powell. You've mentioned
You know what I'm saying?
6 good months
Powell did what he had to do. We did what we had to do.
based on your previous response.
He said, my skill set definitely improved today. Yes, sir. You had to be a little bit patient. You got to be a little raw with it.
Roughly how many months do you think you
Right? So that's what I like about the game. My thing is I'm trying to wait till he wrap it up so I can relax and, you know what I'm saying, do what I got to do. Caught it at the top. I didn't feel FOMO at all. No, you shouldn't. FOMO ain't going to take you nowhere, bro. FOMO. You ain't missing out on nothing.
Of dialing back on restriction. We want to get that right.
You're not missing out on anything, bro.
Market inflation coming down. It gives us the ability to do that.
Let FOMO do what it's gonna do. You get in there and you make your move and you make your bag and you keep it moving. Because at the end of the day, if I eat a cheeseburger, you're not gonna taste it. So what you fear missing out on anything?
In terms of when that'll be, that'll all come out of our communications.
So the man of the hour, right? He's been up here literally 30, 40 minutes.
Hi, Chair Bell. Evan Reiser with iMarket News. Can you explain a little bit more on what you're considering when tapering QT? Do you need to see the overnight reverse repo facility all the
So
way down to
here
zero?
we are, like I said, ladies and gentlemen, the police car was staked out. Once we broke below that, the rest was history. Like, we don't got much to explain. We just got to get in. We got to make a move. That's what it's about. Making a move.
Range of issues will be briefed up in the committee.
Seeing it through.
All of the issues that will be arising over the course of the next, let's say, year or so.
That's the game, y'all. So I'm gonna let you guys enjoy yourself. My thing, that was a bag drop. My thing rolled her up, rolled her down. My thing, we was able to take her around. Brandon, good job, Brandon, good job, man. I'm proud of everybody. That was a bag drop. Continue to keep on winning, ladies and gentlemen. I'm out.